Bloomberg News.
Joining us now on the phone from Vancouver, Marc Faber, the editor and publisher of the Gloom, Boom, and Doom report. Marc, thanks so much for joining us.
My
Always
pleasure.
glad to check in. So at what level does gold have to hit before buying the explorers makes sense, or are you saying buy them now?
Well, I think that there are lots of exploring companies that are not producing any gold, unlike, say, the Newmont Minings of this world and the Freeport McMorans. The exploration companies have no cash flow. So what you need to look for are companies with strong backers that have money to essentially develop the exploration results that they may achieve or may not achieve.
So which ones are not facing a cash crunch, if you like? Which ones have strong backers?
Well, I mean, the ones that are partly owned by the majors, I would say NovaGold would be one, Gabriel Resources, Ivanhoe. These are companies that have essentially strong backers where their exploration results, which are favorable, will be one day developed.
Marc, let me ask you, though, there's very few people talking about the risk of inflation right now. I mean, even the World Bank coming out and saying, this is going to be the first period of global contraction since World War II. So does gold remain a safe bet? I mean, often investors go there when they are worried about inflation, but apparently that's not so much on the minds of a lot of traders right now.
Yes, that's correct. And I would also add to it that the World Bank lags behind. Global GDP, ex-government, in my opinion, has already contracted by at least 10%. The government sector is, of course, still expanding, but the private sector, everywhere you go, business is down between 10 and 40%. You look at exports, they're all way down. And it is true right now, there are no inflationary pressures, although I'd like to point out that healthcare costs and educational costs are still rising, and food costs, food prices, which rose sharply last year, they have eased a little bit, but they didn't go down back to the level of, say, 2005. So there is, in the system, some inflation. And the massive money printing we have and the massive deficits we have now will make it difficult in future, when there are some price pressures, for the Federal Reserve to actually increase interest rates above the rate of GDP growth and above the rate of inflation. And so I think we're laying the foundation here for more inflation in future.
All right. And as far as gold as a fear factor, Marc, just in 20 seconds, and then we'll sort of take a little break and welcome you back, if you don't mind, on the other side of the break. Maybe we'll just talk about it straight on the other side of the break.
Well, I think the problem with gold, to make it very short, is that gold has performed so well in the sense that it went up slightly, whereas all the other assets tumbled. And so gold, relative to, say, the CRB index, which is composed of industrial commodities, is now at the record high. I'm now rather looking at industrial commodities.
So, Marc, before the break, we were talking a lot about gold. What do you make of the stock market at these levels?
Well, I mean, 2 years ago and 15 months ago, I said to myself that there wasn't much value in Asian securities, in the stock markets in general. And I said to myself, what are the conditions under which I would buy? And I came to the conclusion, if markets dropped 50%, I would start buying equities. And markets have tumbled more than 50% in most cases, and individual stocks in some cases by 80-90%. So I think that looking forward, I believe that over the next 10 years, you will make money in stocks if you start buying here. It's very difficult to see a scenario where you wouldn't make any money. In other words, the worse the economy becomes, the more money the central banks will print, and eventually that will lead to a bull market in asset markets.
Marc, this is Peter Cook. Do you expect the U.S. government to have to take additional steps? Is that one of the reasons why you think perhaps buying stocks over the next little bit might make sense?
Well, I think the government's efforts will, by and large, fail to boost economic activity, but they can boost, say, asset markets. They can boost stocks, because stocks have adjusted very meaningfully. This is the second largest bear market in history after the 1929-1932 bear market. And it is possible that we drop from the S&P. We're now slightly below 700. We could go maybe down to 600 or 500. But equally, we could, from the lows, whenever we reach them, also have very, very powerful rebounds, because don't underestimate the power of printing money.
Mark, just today alone, if you had to make a bet on either side of the coin, what would you say?
I would make the following bet. I think that the dollar will begin to weaken. That will be the first signal that some liquidity is coming back into the marketplace. And I would bet that equities can rally between here and the end of April. So
if you had to bet, you'd be more on the bullish side than on the bearish side for equities?
Yes, I think the sentiment right now is very, very negative. It is as negative or more negative than it was positive 2 years ago.
And even with people talking about contracting earnings growth and all sorts of other worries, you say, okay, look, still just looking at data today, it's worth making the bullish bet.
Well, I mean, the news, we know the news is horrible, but really whatever you open up in terms of newspaper or TV program or Bloomberg, there's no good news. Everything is just horrible. And I think the news will stay bad, but maybe the deceleration of bad news will slow down. In other words, what we had is, since last September, the global economy has fallen off a cliff. And the news in October was worse than in September, in December worse than in November, and in February now worse than in January. Right. And so we had an acceleration of bad news, and I think now we can have a deceleration.
Marc Faber, as always, we appreciate the time. Thanks for joining us. He's the editor and publisher of the Gloom, Doom, and Boom Report.
Hear more Bloomberg News reports on the Bloomberg Terminal at AV Go, on Bloomberg Television, and on Bloomberg Radio. Copyright Bloomberg LP.